Hi, this is Professor Rujo with an introduction to Module 5. Module 5 is totally on investments. I think most students enjoy this module because they have a lot of questions about it. So what I've done is I've set up Module 5 to cover all of Chapter 11 and 12 and most of Chapter 13, with the exception of real estate as an investment. That's something that can be dealt with in the future. But the part of Chapter 13 that's most important is mutual funds and electronic traded funds, EFTs. Starts off with noticing the difference between investing and speculation. Very important to understand that. There are several videos that are a very important part of the learning process here that help to augment what you're reading in the textbook. So I recommend that you look at all these videos. Again, right click on the video and bring it up in the new window to hear this, hear all these things. It's very, very good. We're going to be looking at securities markets, the role of the SEC, the difference between a bull and a bear market. We are also going to be moving on to opening up a brokerage account, what a stockbroker does, the differences between full service and discount brokers. Most people buy round lots, but there are lots of odd lots now. They become much more popular, so you'll learn a little bit about that. The insurance that securities firms are under, SIPC, very similar to, say, the FDIC for banks, but you'll read a little bit about that. And then, of course, how to place an order, difference between a market order, a limit order, stop loss, and those are important to understand the differences. Then, of course, understanding how to look at companies, you need to understand the indexes that we listen to every day on the news, like the Dow Jones Industrial Average and the S&P 500 index. There are lots of different indexes that include different stocks, and so they're going to be looking at giving you an introduction to all the indexes. Also, how to look up information about a company is really what the annual report is good for. There are lots of ways to actually find information out about specific companies that you might be looking into, but the annual report has traditionally been the starting place for most people. And of course, how to read stock quotes. There's an interactive map here on the S&P 500. Which is different than the Dow Jones. The Dow Jones only is 30 stocks. That's the most popular one that we hear about, but it really only represents 30 companies, very, very large at that, and across different industries. The S&P stands for Standard & Poor's. The S&P is actually the market index. So the S&P 500 index is the most popular S&P index. And when we talk about the market went up 20% last year, we're talking about the S&P 500. So this is a little interactive map to see what companies are part of the S&P 500. It might be interesting to know that even though Tesla is quite popular and the stock has been going nuts lately, it's not part of the S&P 500. But it will qualify once they record 4 straight quarters of profits. Tesla has not been a relatively profitable company, although their stock price would give you the impression that they are making lots of money. So it's interesting. You might know a little bit about that. There's a video on the difference between the Dow Jones and the S&P 500, and a little introduction to the annual reports, or what we call the 10K. There are several investor education sites that I think you might find interesting. They're listed in the book. Probably look through some of those. And of course, understanding that when you're buying various stocks for yourself, you're actually creating a portfolio. So understanding what a portfolio is and how to diversify is a big part of how Chapter 11 wraps up. And there's a quiz for Chapter 11. Chapter 12, there's a lot more to Chapter 12 and a lot more activities to do in Chapter 12. So we're going to be learning about risk, because it's very, very important to understand what risk is and your tolerance for risk. And so lots of different risks to become aware of, business risk and market risk and inflation risk and liquidity risk, et cetera. All those are Very, very important to understand. So you learn about that. And of course, you have to understand your comfort level with risk, which is one of the assignments I'm going to have you do in this particular part of the chapter. So chapter 12 moves on to understanding more about the stocks in general. They classify stocks as blue chip or growth or tech or income or whatever. The book has lots of them to look over. It also introduces you to some common terms that are used, such as rate of return, dividends, dividend yield, book value, return on equity, PE ratios, beta, all important little things to understand. And some great videos here, Investing 101, some financial analysis explained, all important for you to understand. And these are all short videos, about 3 minutes apiece. Chapter 12 then moves into bonds. So bonds basically is when investors lend money. And investors are lending money in the bond market to corporations, governments, both state and federal, state, local, and federal. And of course, you can lend money to international companies as well. But the bond market is actually quite important, and you're going to understand a little bit about what a bond is. The interest rates, we used to call coupons back in the day, and then the different types of bonds that are available. Important to sort of understand. And again, some good videos on basics of bonds are listed here for you. As you see, there are 3 different activities related to chapter 12 that are very important. The first one is what type of an investor you are. It's very important to understand your tolerance of risk. If you lost, say you invested $10,000, you woke up the next day and $1,000 of it was gone because stock prices were down, how would you feel about that? Would you freak out because you lost $1,000, or would you be okay? So what type of investor you really looks at your ability to tolerate risk, because all investments have levels of risk. Even leaving your money in a bank has some level of risk because of the interest they're paying. And of course, not investing your money at all is also risky. So understanding all those types of risks are very, very important. And this asks you to look at a couple of different websites and assess what type of investor are you. The second activity, can you beat the stock market? Basically is, can you beat, a lot of people believe that they can buy and sell and sort of time the market. Oh, the market's up right now, I'm going to sell. The market's down right now, I'm going to buy. They try to time the market, and they think they can make more money over time than what the market's going to give them naturally. So this is a simulation that allows you to see if you can actually beat the stock market, and I think you're going to enjoy that. And the last activity is about picking your own stocks. This is where some of those very interesting things like book value, PE ratio, beta, other types of issues that you learned in chapter 12 are going to come in to play in this simulation. There's 6 rounds to that simulation. You need to play all 6 rounds. They're going to give you information about different companies. You have to pick the one you think is good, has performed best over a 10-year period of time. They actually disguise everything, but these are actual companies, and the data that they use is historical. And so you'll see how you did in general. Chapter 12 ends with a quiz. Chapter 13, basically the major point of chapter 13 is to understand mutual funds and ETFs. Extremely important today. They are the core of what you will need to understand when you're even picking out options for your 401k plan from an employer. Almost all of them simply limit your choice of investments to mutual funds. And so understanding what these are is really critical for you. And you'll see this play back in the last module, module 6, we talk about retirement. There will be an exercise in which you're going to need this information and knowledge. So here you can, again, what is a mutual fund? What is an EFT? Some really good little explanation. They're short, but right to the point, and they help you understand what you're reading in the book. And then, of course, understanding the types of mutual funds is super important because it relates back to the type of investor you are. The real important thing to understand with mutual funds is if you understand the type of investor you are, you'll understand the types of mutual funds you should be in. Because mutual funds are sort of set up based on risk class. And there are some mutual funds that are extremely low risk. There are some mutual funds that are exceptionally high risk. So understanding your tolerance of risk and where you belong on that spectrum will help guide you in selecting mutual funds that are basically right up your alley, that are just in line with your level of risk. And again, there are several different types of mutual funds that you're going to be looking at here. And of course, some great videos explaining what mutual funds are, the difference between stock funds, index funds, et cetera. And something that a lot of people are interested in over time called socially responsible investing. And that's, they want to invest, but they don't want to invest in companies that sort of do bad things, such as, and their definition of bad things would be pollute the environment, make products that make people sick, like cigarettes, for example. And so socially responsible funds, socially responsible investing is investing in companies that usually do good by the planet. And so they're environmentally conscious, they do quite well. And so basically just an introduction to that I think is important for you to understand. The big activity in this module is the very, very last one here, activity 13.1. You're going to be doing a simulation that's going to last almost 20 minutes. It's going to be actually over 20 minutes in total, where you're going to be receiving money every 6 months for 20 years. And your job is to make sure all your money is invested appropriately, because money sitting around doesn't earn any interest and thus it loses its value. So you have to make sure all your money is invested appropriately. As you play the game, as the years go on, because this game goes 6 months at a time, every 6 months you'll get some type of deposit, which you have to then manage, right? And managing, you'll have more and more investment options available to you as you play the game through the years. And so up front, you might be limited to savings accounts and certificates of deposit. Then you might be getting interest, you might be getting options for government bonds, investing in specific stocks, investing in mutual funds, and investing in risky investments such as currencies or gold or oil commodities. But you have to play the game several years in order to have all those options available to you, and I wish you well. It's at least 20 minutes. There's a lot to it. I hope you enjoy it, but it's basically what's required of us over a lifetime to always make sure our money is invested in earning some type of interest or return. And then of course, chapter 13 ends with a quiz. And then of course, the module exam is on all chapters. 300 different points to earn here in module 5. And I think you're going to really, really enjoy it. So, and again, always, if you have any questions, just give me a holler, send me an email, let me know how you're doing. Okay, thanks a lot.